Welcome to the Techno Fundamental Report for June the 12th. Optimism is the one quality more associated with success and happiness than any other. You got to be optimistic. You just got to be optimistic. Winston Churchill, a pessimist, sees the difficulty in every opportunity. An optimist sees the opportunity in every difficulty. Reading a really good book about Winston Churchill right now. I just can't believe how he had to deal with the bombings of London and Great Britain. It was a very, very difficult time, but he held up. And that was the one thing about him. You know, he replaced the other prime minister who tried to negotiate, Chamberlain, who tried to negotiate with Hitler, didn't get anywhere. But everybody was so impressed with his optimism. It basically saved him during World War II. Don't worry about siding for or against the majority. Worry about taking up any of their irrational beliefs. Marcus Aurelius. The true sign of intelligence is not knowledge, but imagination. You got to use your imagination on this stuff. You know, when it comes to artificial intelligence or understanding the internet, things like that, you just have to kind of let it go. So as you can see here, speaking of optimism, look how pessimistic the majority of the population that was surveyed by AAII. They're very pessimistic. That doesn't get you anywhere. Now, when you're investing, my strategy that I use is based on Warren Buffett's strategy of focus investing. Focus investing is where you know something about your companies and you know something about their stock price. History shows 3 out of 4 stocks move in the same direction as the overall market, either up or down. So if you buy stocks when the market is trending higher, you have a 75% chance of being right. But if you buy when the market is trending lower, you have a 75% chance of being wrong. No stock is immune. You've got to have trend following. That's one of our primary objectives and primary strategies that we use. Now, it says here 3 out of 4 follow the indexes, but there's always one big fish out there that, you know, if you think about it, you're on a yacht and you're fishing for this trophy fish. You got 10 lines in the water, but that one line you get that big fish. Now, it's kind of like a gin rummy hand. You have 10 cards. Think about it. What if you had 20 cards? I mean, you couldn't manage the hand. So with 10 cards, you can kind of manage the hand. You know, if you're in a bad situation, you can improve it. Don't invest in something you don't understand. Very obvious. Risk comes from not knowing what you're doing. Now, what I want to say about that is this. If you can't get serious about this, you need to hire somebody that is serious about it, meaning a registered investment advisor that is serious about what he's doing. Because if you're not serious about it, you're going to get hurt. So Buffett pretty much says if you can't get serious about this, you just put your money in an S&P 500 index fund and don't try to look for that trophy fish because, you know, that's that. But I will say this about index funds. In 1966, the Dow hit 1,000 for the first time. Then it dropped to 500 by 1974. It didn't get back to 1,000 again until 82. But if you had bought Walmart in 74 or up until 82, you made a fortune. So be aware of the fact that you need to be serious about what you're doing. Your sixth sense should be your first sense. Think about it this way. You need heart surgery, and you go and interview heart surgeons. And one guy says to you, look, I've only done 3 or 4 of these procedures. And then you go talk to another guy, and he's done 50 to 100 of these procedures. I think I would hire the guy that had done 50 to 100 because the experience, you get that sixth sense. Intuition is important. You build your experience over time, and it's very important. So let's get into the economy and the market. Okay, here's the unemployment rate for May, 4.2, very steady. As you can see here with this graph here, now this is showing a negative because it's above the 35-week moving average. 35-month moving average. And there are people out there that feel that that's an indication of recession. But I'll put it this way. It looks pretty darn steady to me. So if we start looking at the market, you can see, as we believe, the market made a major low on April the 7th. We think that's a final low because look how this thing has reacted, and we're starting to trend now. So we have been above the 200-day moving average for quite a while. The 21-day has moved above the 50-day, very positive. So if we look at the S&P 500, same story. So this looks like a bull market to me. I can only tell you what I see. Now, on the 200-day moving average, the primary trend is up. S&P's up, NASDAQ's up. So if you're above the 200-day moving average, that's a very positive sign. Now let's look at the aggression index. Now I'm going to look at it two ways. Here's the weekly aggression index where we're comparing the NASDAQ to consumer staples. This is a very important indicator. And it's basically hitting new relative highs. Now we know this is the old high, but we are definitely in an uptrend, which means risk on. So if we look at it on a daily basis, same thing. It's actually breaking out above this prior high. Then if we look at interest rates are stable. So here we go. We've got unemployment, which looks fine, 4.2%, very steady. And now we've got interest rates looking to me to be pretty darn steady. Here's the volatility index, down in a very reasonable area. Now we got that big spike during the tariff fears, but now it's settled down. So the volatility index is very positive. Now if we look at the new lows on the New York Stock Exchange, no problem. We're below 40 a day, so looks very good. All right, I wanted to just kind of remind you of trend following a little bit. Back in 2003, we started paying attention to Apple. Now you see this robust volume here, and then you get this breakout. That was your indication. Now realize this was before they had an iPhone. So the market was discounting the iPhone. And look how beautiful that breakout was. That's what you're looking for. So then if we look at the semiconductors, we're seeing some very good action there. Now this is a risk-on group of stocks. Semiconductors are very cyclical. But you can see here we had a nice base. We've gotten a breakout. Now it's starting to trend. So basically what it's saying is that risk is on. So in conclusion, I'm just telling you, I think we're in a new bull market. It could go on for a while. We think it's going to go to 2035, so we got 10 years to go here. But if you have any questions, let me know. Thank you very much.